Hi class, a pleasant day to all of you. This is Sir Dan, and we are going to continue the discussion on budgetary planning on part 2B, which is about factory overhead and selling administration budgets. But we are done with factory overhead. So in this video, we are going to discuss selling and administration budgets, okay? Plus, you have to watch this lecture video so you can achieve the learning outcomes on the development of selling and administrative expenses budget. Okay, class, let us move on. The selling and administrative expense budget makes up part of a company's operating budget. This portion of the budget includes the planned operating expenses for the business, of course, excluding its direct cost of manufacturing or the cost of goods sold. We have already done the direct materials, direct labor, and factory overhead budget. So after that, the selling and administrative expense budget. Selling and administrative cost, also known as selling, general, and administrative costs, include expenses associated with running the overall business that are typical company expenses from accounting, from legal, from sales department, from marketing department, from facilities, and other corporate activities. So, when we speak of selling, general, and administrative expenses, these are the expenses of the support services: accounting, legal, sales, marketing, facilities, and other office of the president, office of the vice presidents. Okay? This type of expenses are salaries, employees, benefits, rent, insurance, office supplies, delivery expenses, commissions, depreciation, budgets, and other expenses related to these corporate activities. Okay, not on factory building because we have already included those expenses under our factory overhead. Okay, this cost may be fixed or variable. For example, sales commissions are variable selling expense dependent on the level of sales the sales staff achieves. In addition, the sales force also receives fixed base salaries which stay the same regardless of any changes in the sales level. Okay? The office building or warehouse rent is a fixed administrative expense, while the cost of office supplies and utility expenses count as variable administrative expenses. This is very important to determine whether they are fixed or variable in developing assumptions in projecting our selling and administrative expense budget. Okay? Let us continue, class. For expense items that stay unchanged over time, budgeting simply requires determining the annual amount. If it is not changing, okay, you just have to determine the annual amount determined from the prior year and adjusted for any changes and then divided into quarters or months to populate the new budget. Okay? If it is fixed, no change. So we just have to get the annual amount. Then we just have to populate it to the new budget. If we are doing it on a monthly, then we just have to divide it on a monthly basis. Quarterly, then we have to divide it on a quarterly basis. When constructing a budget for variable expenses, it is important to use a process that addresses cost that could increase or decrease depending upon the level of sales in a given time period, like commissions. Okay? For example, sales commission expense varies each month based on the number of units sold. Okay? The company may also have more salespeople and sell more units during a certain season. Employee travel expenses, advertising, and marketing may also change from one month to the next due to seasonality, new product launches, increased employee travel, and other events. So these are the things that we have to consider in doing selling and administrative expense budget assumptions. Okay? So let us have an illustration. Okay, using the stylish furniture. Okay, the company, which in this case is Stylish Furniture, develops the selling and administrative expenses budget based on the following assumptions. Salaries will increase by 10% due to additional benefits. Commissions will increase by 10% due to increase sales. Rent, insurance, and depreciation expenses are fixed expense and will be the same with 2020. Utilities, repairs, and office supplies will increase by 5% due to inflation. Budget expense is estimated at 2% of sales. So these are the assumptions of stylish furniture. And these are the selling and administrative expenses that we are going to use as our reference in developing the 2021. So these are the selling and administrative expenses for 2020. Okay? So here, class, we can now develop our selling and administration expense budget. Let me correct that heading. It is no longer factory overhead, but selling and administration budget. Okay? So here, class, we are going to develop the selling and administrative expense budget. Okay, let us use the same format, okay, of 20 in developing 2021 using the format of 2020. So the first is on the assumption is salaries. What amount are we going to use for salaries? So we have to refer to the assumption. The assumption states that salaries will increase by 10% due to additional benefits. So let us increase 64,400 by 10%. So we will multiply 64,400 by 110% and it will give us 70,840. Doing that for the rest of the quarter, so we will have 283,360. Okay? So what else? Commissions will increase by 10% to increase sales. So these commissions will now be increased by 10%. So multiplying 8,000 by 110%, and the next quarter, so we will have a total of 41,140. Next, rent, insurance, and depreciation expenses are fixed expense and will be the same with 2020. So rent, insurance, and depreciation will all be the same with 2020. Okay? So there is a similarity in structuring your selling and administrative budget with our factory budget, but there is only a slight difference in terms of the nature of the expense. Okay? So here, the next assumption is that utilities, repairs, and office supplies will increase by 5% due to inflation. So we will increase utilities, repairs, and office supplies by 5%. So multiplying the amounts of 2020 with 105%. Okay? Okay, class. And the next assumption is budget's expense is estimated at 2% of sales. Why it is based at 2% of sales? Well, I would say that the sales is on account. So the company is giving sales on account. So collectability of this account will now be in consideration. So there can be accounts receivable that will not be paid. So let us first know we don't have here the budgeted sales. So we have to extract from our previous budget, our sales budget, the quarterly budgeted sales. This is what we have. Quarter 1, 684,500. Quarter 2, 588,500. Quarter 3, 921,000. Quarter 4, 1,460,000. This is what we have done in our sales budget. Okay? And based on the sales budget, we will get 2% of that, and that will be our bad debts. So 2% of 684,500 is 13,690. So doing that in the rest of the quarters, we will have these amounts. Okay? And now we can extract the total. We can now get our total. Okay, so our selling and administrative expense budget is 662,235. Okay, take note, class. What is important here is developing your assumptions and your historical data, the basis that you are going to use for your budget. Okay, it will be difficult. It will be more challenging if you are just starting the business because you don't have any historical data. Okay, class? So now, class, we can now develop our budgeted income statement. So we can now develop our income statement. So sales, based on our sales budget, the total sales is 3,654,000. And we have to determine our cost of goods sold. So our cost of goods sold, our direct materials budget based on our direct materials budget is 824,300, and based on our direct labor budget, it is 1,273,550, and our factory overhead budget is 399,890. So our total cost of goods sold is 2,497,740. So sales less cost of goods sold will give you a gross profit of 1,156,260 less expenses. And we did not segregate our selling and administrative expense. Okay, if we were given the data for selling and administrative, we could segregate that. However, we will just be using one expense for both selling and administrative, and based on our expense budget for selling and administrative, the total is 662,235. So gross profit less expenses, we will have our net income, and the projected income for 2021 of Stylish Furniture Company is 494,025. Okay, class, we have completed the income statement budget. Okay, questions? So if you have questions, please let me know. Okay, bye for now and have a nice day. Stay safe, class.